South Africa's formal job market saw a small lift in the third quarter. Stats SA says total employment rose by 29,000 positions between June and September. That's an increase of 0.3%. Most of the gains came from part-time work, especially in the community services sector. Trade and mining also posted modest increases, but full-time employment slipped by 21,000, with business services and manufacturing recording the biggest cuts. And compared to a year ago, the economy still has 79,000 fewer positions overall. The mining sector posted a strong performance in October. Stats SA says production rose 5.8% year on year, driven by big gains in iron ore, PGMs and manganese ore. Seasonally adjusted output was also higher, marking a second straight month of growth. Manufacturing, meanwhile, showed only a slight improvement, with food and beverages providing the biggest lift. Overall production edged up 0.2% from a year ago, and that's a marked deceleration from September's 1% increase. Business confidence has risen to its strongest level in more than a year. SACCI's morale indicator climbed to 132.3 in November, and that's up sharply from just over 121 points 2 months earlier. But SACCI cautions that the surge was not broad-based. The jump was driven mainly by a jump in overseas tourism and shifts in global market sentiment rather than local economic activity. The organization says key areas of the real economy are still lagging, including sluggish fixed investment, and that the current confidence level could serve as a springboard for structural policy reforms that attract investment, boost growth and improve long-term economic performance. The ANC is drawing up a new export diversification and investment plan as it looks to shield the economy from the impact of the recently imposed U.S. tariffs. Washington slapped a 30% tariff on a wide range of SA exports in August, that is, hitting steel, aluminium, vehicles and agriculture, and affecting more than a third of local exports to the U.S. In response, the ANC wants to lift SA's export performance to 3 trillion rand and reposition state-backed institutions like the IDC and NEF as active equity partners in high-growth sectors like mining, manufacturing and green industrialization. Sticking with trade, a U.S. congressional committee has approved a bill to extend AGOA for another 3 years. The preferential trade program, which expired in September, supports hundreds of thousands of jobs across sub-Saharan Africa by granting duty-free access to the U.S. market. The legislation now moves to the full House of Representatives with no immediate reference to excluding South Africa. Washington had previously indicated that SA could be left out. South Africa's Trade Ministry says it's working to ensure the country remains part of any AGOA extension, even though relations with Washington have become increasingly strained. Conduit Capital is set to disappear from the JSE this month. The bourse will remove the company's listing on the 19th of December after its shares remain suspended for more than 3 years. The group has been unable to meet core JSE requirements, including publishing audited financials, rebuilding a compliant board, and maintaining qualifying operating subsidiaries. Conduit says keeping the listing has become financially unsustainable, given the high costs and lack of a viable path back to compliance. Shareholders will remain invested, but in an unlisted company from next Friday.